Net worth is a fundamental measure of financial health, representing the difference between what you own and what you owe. It's a simple yet powerful indicator that provides insight into an individual's financial standing and long-term stability. While accumulating any level of net worth is an achievement, crossing the $100,000 mark is often seen as a significant milestone. This threshold is not just a number. It marks a pivotal point where financial momentum tends to shift, accelerating wealth growth in ways that may have seemed unattainable before. Reaching $100,000 in net worth often acts as a catalyst for change, both psychologically and financially. For many, this achievement sparks a new level of confidence and opens doors to investment opportunities that were previously out of reach. In this video, we'll explore the reasons why net worth tends to take off after reaching $100,000. By understanding these dynamics, you'll gain insight into how to harness this momentum and continue growing your financial portfolio effectively. Before we delve into the video, if you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. Now let's continue. Reaching $100,000 in net worth often triggers a significant psychological shift, transforming the way individuals approach their finances. Before hitting this milestone, the primary focus is typically on saving, building an emergency fund, paying off debt, and accumulating a financial cushion. Saving is often seen as a safe and necessary strategy to achieve financial security, particularly when starting from a lower net worth. The emphasis is on protection rather than growth. However, once $100,000 is achieved, the mindset begins to evolve. The focus shifts from merely saving to actively investing, which is where true wealth accumulation begins. This shift is driven by the realization that saving alone, especially in low-yield accounts, is insufficient for significant long-term wealth growth. With $100,000 in the bank, individuals start to feel more comfortable taking on calculated risks that offer the potential for higher returns. This is a crucial turning point where the pursuit of financial growth takes precedence over the fear of loss. One of the key psychological changes that occur after reaching $100,000 is an increase in financial confidence. This confidence stems from the knowledge that a substantial financial cushion exists, which can absorb potential losses and still leave room for recovery. With a six-figure net worth, individuals are more likely to explore higher risk, higher reward investment options such as stocks, real estate, or even entrepreneurship. This is a stark contrast to the cautious, risk-averse behavior often exhibited at lower levels of net worth. This newfound willingness to take risks is crucial for wealth accumulation. High-risk investments, while not without their dangers, often offer the potential for much greater returns than traditional savings accounts or low-risk bonds. The ability to embrace these risks, backed by a solid financial foundation, can lead to significant gains that further accelerate net worth growth. Crossing the $100,000 threshold opens up a world of new investment opportunities that were previously inaccessible. Financial institutions, investment firms, and even private investors often set minimum investment requirements that can only be met by those with substantial assets. For example, certain mutual funds, hedge funds, and real estate partnerships may require minimum investments of $100,000 or more, limiting access to those who have yet to reach this milestone. These investment opportunities often come with the potential for higher returns compared to standard offerings available to lower net worth individuals. Hedge funds, for instance, are known for their aggressive investment strategies that can generate significant profits, albeit with higher risk. Similarly, private equity and venture capital investments offer the chance to invest in early-stage companies with the potential for explosive growth. By reaching $100,000 in net worth, investors gain access to these lucrative opportunities, which can further accelerate wealth accumulation. Another significant advantage of reaching $100,000 in net worth is access to financial products and services with lower fees and better terms. Many financial institutions offer tiered pricing structures, where fees decrease as the amount of assets under management increases. For example, wealth management firms often charge lower percentage-based fees for managing larger portfolios. This means that as your net worth grows, the cost of managing your investments decreases, allowing more of your money to stay invested and continue growing. In addition to lower fees, higher net worth individuals often receive better terms on financial products such as loans, mortgages, and credit lines. Banks and lending institutions view individuals with substantial assets as lower risk borrowers, which can lead to more favorable interest rates and repayment terms. These better terms can save significant amounts of money over time, further contributing to the growth of net worth. One of the often overlooked benefits of reaching $100,000 in net worth is the impact of economies of scale. Economies of scale refer to the cost advantages that arise as the scale of operations increases. In the context of personal finance, this means that certain costs become less significant as a percentage of total assets as your net worth grows. For example, many investment products, such as mutual funds and ETFs, charge management fees as a percentage of assets under management, AUM. While these fees remain the same in percentage terms, they represent a smaller portion of total returns as the investment amount increases. On a $10,000 portfolio, a 1% fee might seem substantial, but on a $100,000 portfolio, the same fee has a smaller impact relative to the overall growth potential. In addition, fixed costs, such as transaction fees or account maintenance fees, become less burdensome as net worth increases. A $10 transaction fee is much more significant when you're investing $1,000 compared to when you're investing $100,000. As these costs become a smaller portion of total expenses, more of your money can stay invested and continue to grow, accelerating the accumulation of wealth. Financial leverage, or the use of borrowed capital to increase the potential return on investment, becomes more accessible and advantageous as net worth grows. Higher net worth individuals are often seen as lower risk borrowers, allowing them to access larger loans with more favorable terms. This access to capital can be a powerful tool for wealth building, enabling individuals to invest in opportunities that they otherwise couldn't afford. For example, real estate is a popular asset class for leveraging wealth. With $100,000 in net worth, an individual might be able to secure a mortgage to purchase a property worth several times that amount. The income generated from rental properties or the appreciation of real estate values can significantly enhance net worth over time. This is a form of financial leverage where the returns on the investment far exceed the cost of borrowing, provided the investment is sound. As net worth grows, so does access to high net worth networks and communities. These networks can be invaluable for wealth building, providing access to exclusive investment opportunities, partnerships, and business ventures. Being part of a network of wealthy individuals can open doors to investments that are not available to the general public, such as private equity deals, venture capital opportunities, or off-market real estate investments. In addition to investment opportunities, high net worth networks often provide access to valuable knowledge and advice. Networking with other wealthy individuals can lead to the sharing of strategies, insights, and tips that can help further accelerate net worth growth. This is a form of intellectual leverage, where the collective knowledge and experience of the group can lead to better decision-making and more successful investments. The concept of network effects extends beyond just investment opportunities. High net worth individuals often have access to better legal, financial, and tax advice, as they can afford to hire the best professionals in these fields. This access to top-tier advice and services further enhances the ability to grow and protect wealth over time. The economies of scale in wealth building, combined with the advantages of financial leverage and the power of high net worth networks, create a fertile environment for accelerated net worth growth. As each of these factors comes into play, the ability to build wealth becomes more efficient and effective, allowing for even greater financial success. One of the most significant benefits of reaching $100,000 in net worth is the ability to generate substantial passive income. Passive income is money earned with minimal effort, typically through investments in assets such as stocks, bonds, real estate, or businesses. The key to generating significant passive income is having a large enough capital base to invest in income-producing assets. With $100,000 or more, individuals have the ability to allocate a portion of their net worth to investments that generate ongoing income. For example, dividend-paying stocks offer a regular income stream in the form of dividends paid out to shareholders. The more shares you own, the higher your dividend income. Similarly, bonds pay interest to bondholders, providing a steady income stream that can be reinvested or used to cover living expenses. As passive income starts to flow in, one of the most effective strategies for building wealth is to reinvest that income. Reinvesting dividends, interest payments, or rental income back into your investment portfolio creates a compounding effect that can significantly accelerate net worth growth. For example, if you receive $5,000 in dividends from your stock investments, reinvesting that money into additional shares allows you to increase your future dividend income. Over time, this reinvestment loop creates a snowball effect where your passive income grows larger with each reinvestment, further boosting your overall net worth. The power of reinvesting passive income is particularly evident in tax-advantaged accounts, where the returns can grow tax-free or tax-deferred. By reinvesting your earnings within these accounts, you can maximize the compounding effect and accelerate your journey to greater wealth. The ability to create a reinvestment loop is one of the key reasons why net worth can grow exponentially after reaching $100,000. As net worth grows, so does the need to protect that wealth from the eroding effects of inflation. Inflation is the gradual increase in prices over time, which can reduce the purchasing power of money. For high net worth individuals, inflation protection becomes increasingly important, as even small increases in inflation can have a significant impact on large sums of money. One of the most effective ways to protect against inflation is through the acquisition of real assets. Real assets, such as real estate, commodities, and infrastructure, have intrinsic value and tend to appreciate over time, often at a rate that outpaces inflation. By investing in real assets, you can not only protect your wealth from inflation, but also potentially increase your net worth as these assets appreciate. Real estate is a particularly popular choice for inflation protection, as property values and rental income tend to rise with inflation. This makes real estate an attractive investment for those looking to preserve and grow their wealth over the long term. Additionally, real estate investments can provide tax benefits such as depreciation deductions and the ability to defer capital gains taxes through 1031 exchanges. Commodities such as gold, silver, and oil are another common inflation hedge. These tangible assets have historically maintained their value during periods of inflation, making them a reliable store of wealth. While commodities can be more volatile than other investments, they offer a level of diversification that can protect your overall portfolio from inflationary pressures. Reaching the $100,000 milestone in net worth marks a pivotal turning point on the path to financial success. As outlined in this video, surpassing this threshold brings about significant advantages that can rapidly accelerate wealth accumulation. These factors don't just operate in isolation. They interact in a synergistic way, creating a wealth multiplier effect that makes future financial growth more predictable and powerful. By understanding and leveraging these dynamics, you can move from merely saving money to truly building lasting wealth. As you continue to manage and grow your net worth, remember that reaching $100,000 is just the beginning. With strategic planning and disciplined investing, you can harness the momentum generated at this stage to achieve even greater financial milestones.